Welcome to our webinar. The topic for today's webinar is how to select the right stock for trading. Before starting the webinar, there is a disclaimer with respect to DSIJ Wealth Advisory. DSIJ Wealth Advisory Private Limited, formerly known as DSIJ Private Limited, research analyst and investment advisor, is regulated by the Security and Exchange Board of India, SEBI. Investment in securities market is subjected to market risk. Read all the related documents carefully before investing. The securities quoted are for illustration purposes and should not be considered as a recommendation. Registration granted by SEBI, enlistment with BSc, and certification from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to the investor. So this was a disclaimer. So our topic for today's webinar is right stock selection for trading. So the webinar is being presented by Karan Bhojwani, Executive Editor, VP DIU Research at DSIJ Private Limited. So I welcome everyone on behalf of DSIJ Private Limited. So in this webinar, we will try to answer the key question which every market participants ask. The question is which stock to trade, which is the good stock to trade. I'm sure you might have asked over the years this question to many of the people, and you must have tried certain systems, certain strategy also, but only to see that beyond a point that strategy is not working. Someday this strategy might work, other day this strategy might not work because the market might turn range bound. But in this webinar, the framework which we would be sharing with you would definitely elevate your stock selection process. You will find you don't need to ask this question again and again to anyone else. Only you need to design this framework and you would have all the right answers, which is the right stock to trade. So we will move ahead with understanding how to develop this framework and what is this framework is all about. So this webinar is divided into 4 key segments. We will begin the segment with first segment, which is understanding 2 phases of market. Why this is important? Because to draw a conclusion, to come to a conclusion which stock is good for trading, we should understand what kind of phases are there in market so that we can correlate it that the strategy or the stock selection process which we have shortlisted has certain kind of background to it. So this would be the building block initial phase of our strategy of building how or framework of building how to select the right stock for the trading purposes. Then we will move on to the second phase or the second stage would be to understand the type of market participants and their behavior. We know there are multiple market participants actively trading in market, but we don't understand or we cannot define this market participant in a category. But in this webinar, we will try to understand their psychology, how do they trade, and what are their motives behind the moves and their behavior as well. Third, again, a key segment, understanding key concepts of compression. So compression is very important to this study or framework of how to select right stock for trading. So we will understand the concepts of compression with an example. Finally, we will reach to the stage where we will do a case study, and these case studies would be an example which we have taken in our recommendation in most of our trader services, which is a premium product we offer to our clients. So fourth and last step would be identifying or selecting the right kind of stocks for your trading strategy or for a trading purpose. And I will show you 4 to 5 case studies as well. So we will begin with the presentation, 2 phases of market. Are you guys aware about the phases of market? It's very simple. Either market trend or market move in a range bound manner. So trending means stock or index is moving in a particular direction for a sustainable period of time. So you can see in this graph, which is in the presentation itself, the markets on the left-hand side, the trending market shows that the trend is clearly upward. So within the uptrend, there are certain minor pullbacks, but the prevailing trend is clearly up move. So the stock price or index price in the trending market keeps moving higher or lower depending upon whether the stock is in an uptrend or a downtrend. Second phase of the market is range bound market. As the name suggests, the nature of this market, it trades within a range. So basically on the right hand side of the screen, you can see that the graph is representing a range bound market where the price is trading between the band, upper band and the lower band, where the stock is being resisted at the higher level and being taken support at the lower level. So you see that the prices are moving between the two horizontal trend lines plotted on this chart. So this phase is the second phase of the market. First phase is the trending phase. Second phase is the range bound phase of the market. I hope the concept of two phases of market is very simple and straightforward, and you have understood it well. So just to enhance a little bit of understanding, trending market. In trending market, price keeps moving in one direction for a meaningful period. Like we saw in the earlier graph, it was a clear-cut uptrend, and the prices were keep moving in one direction for a meaningful period. Though there were certain pullbacks or retracement within an uptrend, but the structural trend was clearly in the upside. In an uptrend, highs and lows keep rising. You can see that there is a chart or illustration of uptrend in this slide, which clearly shows that the price is rising and the lows are also rising. Similarly, on the other hand side, in the downtrend, you can see though the market is trending, but it's on a downside. So in the downtrend, highs are lower and the lows keep falling lower. So this is the scenario of trending market where there is an uptrend and a downtrend. Second is range bound market. Again, a simple, straightforward understanding of this is that price swings within an horizontal band instead of making a sustained directional move. In uptrend, what we saw that there was a sustained directional up move. The price were moving higher in an uptrend and lower in a downtrend. If we were not trading in a range, there were certain pullbacks between a clear uptrend, but the price were trending. In the range bound market, you can see that prices has been stuck within a two boundaries, which is in resistance and support line. And within this two boundary, prices have been trading over a period of time. So basically, if we have to sum it up, there are only two kinds of phases in the market, which is trending market or range bound market. Market either trend, market either range bound, or move in a consolidation manner. So moving ahead, within a trending market, there are two phases. We understood first there are two kinds of market. One is trending market and one is range bound market. Now we will dig deeper into the trending market phase. In trending market, there are two more phases. Within the trending market, there are two more phases, which is known as compression and expansion phase. Compression phase, think of a spring. When you hold a spring and put certain amount of pressure, it started to compress. The more pressure you add, the more compression would take place. Until and unless the period where the compression is so, or the force is exerted so high that the rings or the coils of the spring touches each other. So the pressure completely leads to collision or the shrink of the spring. And as soon as the pressure is being the force which was inserted by you or applied by you is released, suddenly that spring started to expand. Similarly is the nature of the market. Either markets are in contraction phase or expansion phase within a trending market phase. So in contraction phase, just like an example of spring, the price tend to compress. It compressed to certain extent that as soon as that compression has been released, it will start to expand. So expansion is basically momentum, directional move, release of energy. So within the trending market, these two market phases are critical to understand: contraction and expansion phase. So in contraction phase, tight range, prices move in a very tight band, or either it pauses completely, it do not show any directional move. Meanwhile, in the expansion phase, there is a lot of momentum in the price and it moves in a directional move. We will move ahead. We will understand that within the expansion phase, there is a bullish expansion and bearish expansion. In bullish expansion, we can clearly see that prices are inching higher, higher and higher. Meanwhile, in the bearish expansion, prices are falling and they are making fresh lows. So basically, this phase of the market is ruled by the active buyers or active sellers. I will dig into deeper of the concept of active buyers or seller later on, but do remember the expansion phase is ruled by active buyers or seller. You should note this down. or keep just remember this thing. In the expansion phase, active buyers take prudence, or they are in the charge of the prices. Now coming to the contraction phase, as mentioned earlier, it moves in a range, particular narrow range, and here the reactive participants are active. So in the trending phase, in the expansion phase, basically the active players are in action, whereas in the contraction phase, the reactive market participants are in action. So these two elements are key to understand who are reactive participants and who are active participants. We will understand in the coming section now, but I hope so far whatever has been explained, it is very much clear to you so that we can move forward. Please type in your responses so I can move forward. If there is any certain query with respect to contraction, expansion phase, or any other concept which we have explained earlier, you can just drop a message in the chat box. So I will clear the query. I would request everyone, at least some participants can answer in the chat box whether concept is clear or not. So we can proceed ahead, because these concepts are the building block which will help us to formulate the framework for identifying right stocks for trading purposes. Yeah, I will come to that part. Reactive participants, I will explain it. But so far, whatever has been explained, is it clear? Just respond yes if it is clear. If there is any doubt, just put it in the chat box that something is not clear. I need some explanation or more explanation on that. So I will help you to understand in a better manner. So within the trending phase, we have two phases. One is expansion, one is contraction. Expansion phase is ruled by active participants, and contraction phase is ruled by reactive participants. Okay. So yes, very good. So I will move ahead. So now we will come to the before moving to the active and reactive market players, you should understand market always follows this cycle. Contraction phase leads to expansion phase leads to contraction phase, and again this contraction phase leads to an expansion phase. So this cycle keeps on repeating each and every time. You can see that currently the markets which are Nifty 50 index markets are trading within a range from mid-June. They have been trading within a range of 450 points to 500. So that is basically a contraction phase. So you can see historically also contraction phase leads way for the expansion phase. Then again a contraction phase comes, and then it is followed by again an expansion phase. So in expansion phase, like mentioned earlier, price tends to move in one direction clearly. Active participants drive the momentum and conviction, and this is the best contraction. Expansion phase is the best suited for trend following strategies and for the trading purposes. Meanwhile, on the contraction phase, price moves in a tighter range. Range bound and contraction phase are somewhat different. In range bound, the range can be very large, can be very broad, but in contraction phase, most of the times the range is very much narrow. Here, reactive participants are dominant, market lacks clear conviction, and they move in the range. This often acts as a pause before the next major move. So simple concept is contraction phase leads to expansion phase leads to contraction, and this cycle keeps on repeating, and we have to take advantage of this cycle and be positioning when we should position ourselves in such a manner at the right point of time when there is shift is about to happen, and we will understand this thing at the later half of this webinar. Now we will understand the market participants and their behavior. Remember, we talked about reactive and active players in the market. So active players are dominant when the market is in clear expansion phase. Meanwhile, the reactive players are dominant when the market does not have a clear consensus, or there is no clear directional play going on in the market. It is trading within a narrow range. So what does reactive players mean? So these reactive players, as the name suggests, are reactive. They react only when the price of an asset or an stock reaches near resistance or support area. Basically, they react when the price reaches to one extreme or other extreme of the range. Between the range, they are not active, but they they participate basically when the price reaches a upper boundary or lower boundary of a range, like seen in the left hand side of the chart. Reactive players react as soon as the price reaches near the resistance. They start booking the profit because they have taken the stock at the support level, and when again the stock reaches the support level, they again participate by entering at the lower level. So because there is no clear consensus and these players are dominating, so the prices tend to be capped within the particular range. So reactive players basically operate around the perceived fair value. Like I mentioned, the resistance line is the perceived value of a resistance. Meanwhile, the support line is perceived as a fair value to enter the stock. They buy near lower levels and sell near the higher levels. They usually wait for prices to come to the particular level. That's why they are said to be as a reactive player. This tend to keeps because there is no active participation, or there is no clear concession, or there is no enough of volume or enough of the force to pull the prices higher or lower. Hence, the price are capped within a particular range. They only participate or take part when the prices reach at the extreme level, which is the upper boundary or the lower boundary of a range. So this is basically a contraction phase where reactive players are active because they trade only when the price reaches near resistance or support area. Meanwhile, active players are completely opposite. They have clear conviction. They try to shift the price higher by building a lot of or putting a lot of buying pressure. They take the price out of this range because their buying pressure is so hard and fast that the current contraction phase turns into a expansion phase. So basically, they are pushing the price out of the range. Any particular stock, let's say the stock is trading between 95 and 102. So we see that the stock has been trading for the last 1 month between 95 to 102. As soon as some players get a news that maybe this sector might be the next big sector, so they position themselves accordingly. And whenever they feel some news is building up, or maybe some sectorial tailwind would come to this stock, or maybe any other news is likely to come, this player actively push the price out of the boundary of the trading range, and they would take this stock to the higher levels. So this is an expansion phase where active players are a lot of. You might see that once you might have seen in your career, you study a stock that for a lot of period of time a stock has been consolidated or moving in a particular range. Then all of a sudden it moves 20-30% in just 2 days. Why does this happen? Because the buying power is overwhelming the selling power, and the buying demand for the stock has been increasing. And this is why the active players play a crucial role in the expansion of the phase. So expansion of the phase basically helps to earn a good amount of money when you are trading. So in this webinar, our aim is to identify the stock which is about to transition from the phase of contraction to the expansion phase. So basically, we are looking for a period where the active players are just about to take control of the prices from the reactive players. So in the later half, which we are about to come, you will see that we are trying to position ourselves at the right point of time, or at the right cups of the stock moving into the favor of active players, or they will be taking the charge. So let's now understand how to select the right stocks for your trading purposes. So basically, everyone would have tried this thing. Basically, we might have entered into a breakout. Some breakout works, some don't work. Some breakout turns into a false breakout trap. So we see that a stock has been trading in a range, or maybe in a certain technical pattern, and soon after the prices reach the upper boundary of the technical pattern, we enter only to realize that the stock falls back into the range or back within the pattern. So this might have been happening with all of us, and hence a proper framework is required. And the framework should help you to identify the right transition phase. The transition phase from where the active players would take over from the reactive players. So this is just a concept or the starting building blocks of the complete framework. Important thing for us to understand, we need to identify the stock which is in the trending phase. So you can see in the right hand side of the chart, the stock has been clearly in the uptrend. Then it is followed by a range behavior or a contraction phase. So this contraction phase again would lead to expansion phase, because just like the spring example which I gave earlier, the energy or the pent has completely built up. It is just about to release, and as soon as it releases, the price will shoot up. So market and stocks keep altering between expansion and contraction phase. Contraction and range bound behavior go hand in hand. After a strong trending move, price often pauses and consolidate before the next move. For stock selection, focus on stocks showing contraction only after a clear expansion phase. This is very crucial point. For stock selection, we should only concentrate on stock showing contraction phase only after a clear expansion phase. Don't just follow a stock which is just consolidating, and within that consolidation, a minor or maybe a small uptrend has been seen. The uptrend should be clearly visible on the chart, and then only you select that stock for a contraction phase. That is very crucial. So before moving to the case studies or stock selection process, some of the key concepts which we should understand is inside bar, NR4, NR7. These concepts basically would help us to identify a phase where reactive players are almost tired and the active players would take control from the reactive players. So whenever you identify such condition is meeting, then you can say that this is the time to watch out for this stock, and the active players would probably take action or would participate in the action. So what is an inside bar? As the name suggests, it's a very plain concept. You can see on the left hand side of the chart, the red bar is within the high low of the previous candle. So the red candle is traded within the high low of the previous candle. So the previous candle would be considered as a mother bar, and the second bar or the second candle which traded within the high low of the previous candle would be considered as an inside bar. So the bar or the candle which traded within the high low of the previous trading session is considered as an inside bar. Second concept is NR4. NR4 is basically narrow range 4. In the center chart, we can see each candle represents daily price action of a single trading session. We have 4 candle means 4 trading session. So on the first trading session, we have a sizable bar or a sizable candle with a green body. Second is again a red body, sizable candle. Third is green sizable candle. Again, the body is green. Now the fourth candle has the narrowest daily range. Daily range means high to low of that particular session. So you can see the first trading session or the first candle has a very high. The difference between high and low is substantial. Second candle also has a very substantial difference between high and low. Third also. Meanwhile, the fourth candle high difference between high and low is very narrow. So that is the narrowest of the 4 bar. So basically, what is NR4? NR4 is indicating the narrowest daily range of last 4 trading session. So the 4th trading session would be considered as NR4 bar. So this basically, again, the concept here is this is indicating clear-cut compression because the daily range is shrinking. Remember the example of spring? Compression is happening. You can see that over here the daily range is getting compressed and compressed until a point we reach that the 4th bar is the narrowest of all the 4 trading sessions. I hope this concept is clear. NR4. Now the third concept is NR7. It's an extension of NR4. Basically, over here there are 7 trading sessions. Each candle represents 1 trading session, and you can see the 7th candle has the narrowest daily range of the last 7 trading session. In NR4, we have the narrowest daily range in the 4th. Over here, NR7, we have the narrowest daily range in the 7th trading session, which is the 7th candlestick. So these are the 3 key concepts to understand and which help us to identify the phase of compression. Inside bar, the price moves within the high and low of previous trading session. NR4, again, narrowest of the 4 trading session daily range. NR7, narrowest daily range of the last 7 trading session. So these are the key concepts for identifying the compression phase. Now, what we will do, we will combine both the concepts. What we will do, we will combine inside bar plus NR4 and inside bar plus NR7. So what is inside bar plus NR4? Concept is simple, clear, which we have understood earlier. Inside bar basically trades within the range of prior trading session, and this bar should have the narrowest range, daily range in the last four trading session. You can see on the left hand side of the presentation chart, which is highlighted in the clear cut, which says that this is the inside bar and NR4. So you can see the fourth candlestick has traded within the high low of the third candlestick over here. This is the high and low of third candle, and fourth candle traded within the high low of previous session, which is the third session. And similarly, it is the narrowest range of the last four trading session. So inside bar plus NR4, if you initially we understand the concept of inside bar NR4 and NR7 in isolation. Now what we are doing, we are combining inside bar and NR4 and inside bar and NR7. We need to understand that in isolation, these would show a compression, but the high probability setup won't come. We need to combine both, best of the both together. So inside bar plus NR7 is similar. Just the extension is that it lasts up to 7 trading session. So over here you can see the seventh candle traded within the high low of the sixth trading session, and it had the narrowest of the range in the last trading sessions. So what we did, we understood the phase of contraction and expansion. We understood contraction is followed by expansion, and again contraction and expansion. This cycle keeps on repeating. Now we are trying to position ourselves at the cups at the moment when the active players would take over the betting from the reactive players, and the prices would start to rise because the active participants would be active over here and take control. So the inside bar plus NR4 formation basically clearly indicates the price has compressed. Similarly, with inside bar plus NR7, it clearly indicates that the price has compressed. So we will position ourselves when we identify such kind of setup. There is one more thing which help us to identify the compression phase, which is very popular amongst the Western traders and is followed by very famous traders in the Western world, is 3 days tight close. So 3 days tight close, the concept is very, very easy to understand. The closing of last three consecutive candles or the stock price would be near by 1.5% or maximum by 2%. So whenever the last three trading session or whenever there is a consecutive similar close of a stock price in the last three trading session, we get 3 days tight close pattern. So let's say on the fifth trading session, the price closed at 105. Sixth trading session, the price closed at 106. And again at the fifth trading session, price closed at 105. So you see there is a difference of only hardly 1%. Means fifth trading session close was 105. Sixth trading session close was 106. And again on the seventh trading session close back to 105. So we saw that the difference between the close of between the last three candles was hardly 1%. So whenever you identify such situation, we can understand, or this indicates that the range is compressing. We are into a compression phase. So this is one of the key thing which Western world trader use, 3 days tight close, and we also would follow in this setups. So I hope the concept which we have shared right from NR4, NR7 to inside bar and 3 days tight close are clear, because now we will be moving to the case studies and selecting the stocks, how to select the right stocks. Just reply in the chat box if all the concepts are clear, or if you have any questions with respect to this thing. Daily time frame is preferable for trading purposes. As if now, I would like to ask each and every one of you whether these all concepts are clear with you, so we can move forward and understand how to select the right stock. And let's find out some case study which we have actually recommended in our trader services. I'm waiting for the responses. Please respond. 3 days tight close, NR4, NR7 inside bar. Then we combine inside bar with NR4 an inside bar with NR7. Then we understood the concept of 3 days tight close. So let's move ahead. I've got a couple of responses. That the concept is clear. So now we will be heading to the chart segment. So all the stocks which we will be seeing currently were being provided in our trader services. So the first stock, I'm just sharing this from just wait a moment. So is the chart visible to you? Just post your responses in the chat box. So now this is the chart of Motherson Sumi daily chart. Here we can see a clear cut uptrend. You can see prices are moving higher. It went on to hit a fresh 52-week higher in round about May 29. In what we see that the after a period of expansion, we see a period of contraction where price moved in a particular range. And right at the 21 EMA support, 21 exponential moving average. This line is a 21 EMA thing. Here you can see the formation of inside bar because the price traded within the high low of previous trading session. Also, this bar range is about 3 points, which is the narrowest in the last 4 trading session because prior trading session had a 4.38 points range. Before that, 3.16, and before that, again 3.03. So basically, this was the narrowest amongst the four. And after that, NR4 formation, what we see is a big move. Right after the NR4 and inside bar formation, we see a big move. This move was on the closing basis of 5%. On intraday basis, it went up to a fresh 52-week high where the prices rose till 155.25. You can see over here. So the previous trading session close was 144.58 and the next trading session close was 151.71. Meanwhile, the high of the trading session was 155. So near about from previous closing session to the next trading session high, what we saw that the stock moved nearly about 11 points. So this was the phase where we should position ourselves or should keep the stock on our watch list because there was a formation of inside bar with an NR4. And also you can see the volumes have been dried up in the recent consolidation phase, which clearly suggests that the distribution was not taking place. So whenever you identify such kind of stock, keep these stocks on your watch list. And when the stock moves above the high of the compression bar, which is inside the bar or an R4 bar, you can take the entry with a limited stop loss on the low of a mother bar. So the point over here is the low was around 142. Your entry would have been 145.50 and your risk reward would have been 4 rupees on the risk and you would have easily gained 1:3 risk reward kind of stuff over here. So this was implemented in our trader services. So very next day the stock moved. So basically on this particular day where you see the formation of inside bar NR4, you keep the stock on your watch list and in the next trading session, when the stock moves above the high of the inside bar, you should take a position, long position with a stop loss of low of mother bar. So this was one of the setup which we recommend. Now coming to second setup, Torrent Pharma. So Torrent Pharma Nifty Pharma Index was on the move in the last couple of trading sessions. It almost made a fresh all-time high. And you can see over here, initially the trend was clearly uptrend. A clear uptrend was visible in this stock, Torrent Pharmaceuticals. It made a 52-week fresh high. Now again, what we see over here, after a clear up move, the prices have been moving in a particular range. You see, this is the clear range. There are certain exceptions over here and there, and in trading, nothing can be precision. There are certain exceptions. You can see a plus 2% up and down move below and above the range. But what is the main important context over here is that we see our concept forming over here. We see the conditions meeting over here. Inside bar plus 3-day tight close, which is 3DTC. So see the example of 3-day tight close. The closing on June 23 was 4514. 4514 on June 23. June 24 closing was 4504, 4504 rupees. And Thursday, which is 25 June, the closing was basically near about the same level, 4516. So you can see in the last three consecutive trading session, closing was just around about 4,500 level. So this help us to meet the condition of 3 days tight close. And the next very day, we see a good sizable move of on the closing basis, the stock moved 3.13%. However, on the intraday basis, it moved around about 5%. So what we are seeing over here, basically uptrend, range bound manner, then compression conditions identify. 3 day tight close identify, which clearly indicates compression. And also along with that, the volumes have been drying up, and this formation was identified near 21 exponential moving average, which is considered to be a good important support for the short term. Now, this stock would just, when you see the setup and you will say, wow, this stock just moved brilliantly in two trading session. It moved nearly about 16 to 17%. So over here also, you can see from the downtrend, it was clear cut trending up move. If you would have been a breakout trader, you can check this line. Over here, you would have got a false breakout. Again, over here, a false breakout. Again, over here, a false breakout. But just positioning yourself with the concept of 3 days tight close, you could have captured such a gigantic move in the stock. So over here, 3 day tight close. Basically, the closing of June 22 was 1616, again 1615, and again 1613. So this meets the condition of 3 day tight close. And the volume again was shrinking. Price and volume both shrinking around the 21 EMA. And next day, you can see stock move around 12%, 11.5 on the closing basis, but on intraday basis, it moved to 1854, which saw a good follow-up move also, 1930, and then again expansion would be followed by contraction. Then the same cycle would repeat unless and until the structure is good. So this was the third stock. Moving to the fourth, Bank of Maharashtra. Again, the case of 3 days tight close. You can see over here the closing is 87.89, again 88.53, 88.71. So basically the difference between the closes is near about 1.5 to 1.25%. Important is the closing should be within the range of 1.5 or maximum 2%, and the range should be looking like a compress. If the bars are quite wide, please avoid that thing. And again, this is taking just above the 21 exponential moving average, and the next day you see the stock moving by 6%, near about 6%. Again, over here the volumes have, within this formation of 3 day tight close, the volume have dried up. So there are multiple more examples to share with you, but the concept, the important thing was to help you understand the concept and keep these stocks on your watch list, which are exhibiting this, meeting the criteria of 3 day tight close, inside bar plus NR47 near the 21 exponential moving average. And all these stocks which we have considered are based on a daily time frame. So all these are daily time frame charts. So whenever you spot any condition in the daily time frame, you can take the stock on the watch list and make the decision accordingly. You know the rules. We have explained it clearly. So this will help you to identify good setups or find the right stocks which are best to trade in the coming trading sessions. I hope the concept and the case studies would give you a complete clear picture of what is being taught to you. So these are our trader services. Pop stock, which is for intraday trading. Pop option. This is basically a option product for stocks only, where we recommend only buy trades. Basically, either buy put or buy call. Only plain vanilla call, buy and put buy. Again, third product is Pop BTST. Buy today, sell tomorrow. And last one is the swing trading product, which is technical advisory service, TAS. Cash-based product holding period is 5 to 18 trading sessions, and the maximum number of recommendation in this product are 8, and the range is between 5 to 8 of this product. So these are the 4 trader services product. We follow this kind of strategy which we have explained to you in all these products. We identify such condition and keep the stock on our watch list. And similarly, we take action based on this thing. You can connect with us on these social media platforms. We are available on Facebook at dsij.in, Instagram @Dalal Street Invest IVNJ Journal, YouTube Dalal Street Investment Journal, and Telegram DSIJ underscore Telegram, LinkedIn Dalal Street Investment Journal, and WhatsApp also. We have a community at WhatsApp as well. We share a lot of stuff on all these platforms, right from the trending news plus to the knowledge articles. And on our website, there are a lot of screeners available, and you can get all the information of the market, and you can keep yourself updated with all the market activities. Lastly, I would like to thank every one of you who have participated in this webinar, and I hope you have learned something which could help you to elevate your trading journey and which will help you to reach new heights in your trading career. Thank you for participating. Now we will be taking questions based on the presentation we have given to you. You can connect at DSIJ.in on Facebook, the Dalal Street Investment Journal on Instagram. If you have any question, you can please ask me. So how was the session today? I would like to have your feedback. It will encourage us to conduct such more session, and this is nowhere clear-cut available on any book or on the Google or any other open platform. This has been developed, modified accordingly with the years of experience or in the years of market watching. Please send us your queries if you have in the chat box. I would be happy to respond. You can also share your feedback with respect to this presentation. Yes, so someone has asked for fixed transmission. Was there a 3-day tight close around May? Yes, the answer is yes. There was a 3-day tight close, and it was just near about the 21-day EMA, rising EMA. So if you would have been a breakout trader, you would have taken at this bar. But if you would have followed this strategy of 3-day tight close, you would have positioned yourself, or this stock would have been on your watch list a day before. So this is the concept. So 20-day EMA is basically an exponential moving average, which reflects the average of 21-day exponentially. So this is widely followed by short-term traders. Hence, we keep this criteria for identifying good setups. The stock should trade about 21-day EMA or near about, or just, and it should be trending upward. So this is the concept of 21 EMA and the relevance of 20-day EMA. So again, a last thing, shout out. If you have any question, please post it. Feedback, welcome, encouraging, would be encouraged, would act as an encouraging thing to us. We will conduct such more session in the futures. So there are a lot of stock specific queries being posted in the group. So actually we are not allowed to comment on stock specific query, but yes, you can. Now the concept is clear with all of you. You can identify such kind of stocks, and you can see whether the condition is meeting or not what we have explained in this presentation, and you can place your position accordingly. So once again, thank you everyone for joining in, and I hope you learned something new, and this would help to elevate your trading journey. Thank you. Do visit our website if you want to see our offerings in the trader services. You will get all the details over there. And plus, if you want to stay updated with market related information, you can check out our Mindshare segment. There is also a knowledge segment, and you can find all the knowledge related topics in the knowledge segment. Thank you everyone for joining in. So there is one question: how to select a stock to trade at 9:30 for intraday trading? So basically, I gave you an example. Let's say you identified a condition of 3-day tight close, which is near about the 20-day 21 EMA, 21 DEMA, daily EMA, exponential moving average. So at that point of time, you will keep this stock in the watch list. As soon as the stock moves about the high of the third candle of third tight close, then you will take the entry. Now this entry can be triggered by 9:20 also, 9:25 also, 9:35 also, 10:45 also. So there is no particular point where at 9:30 you can take the entry. You just need to keep these stocks on your watch list, and whenever the stock moves about the condition which we have identified, just take the trade, and you have the stop loss. If it is an inside bar and NR4, you will take the stop loss as a mother bar low. Similarly, with the 3-day tight close, you can take the stop loss as a low of the first candle. So thank you for the feedback. Someone has shared very good learning session. Thank you. So thanks everyone for joining in. We will see you in the next session. Thank you everyone.